Yeah, I worked for a couple of banks in commercial finance. I spent 9 years with the American Bankers Association, where I spent that decade analyzing the industry and participating with the financiers and understanding the technologies that they were bringing to bear. Participated in a lot of financial transactions myself in real estate. And had my own business educating bankers, mostly on economics, but regulatory matters as well for another 8 years or so. So I've been around banking for a long, long time. I've been out of it for a while, but I have been paying a lot of attention in the last couple of years to some of the new technologies that are coming around, particularly blockchain and AI. And being an economist by trade, I've been spending a lot of time looking at some of the trends in business cycles and the way our government has been trying and failing to manage the business cycle lately. It is warm in here, isn't it?
Yes, it is.
Yeah. I'm going to move through.
I'll try to get the fan. Maybe I can.
Oh, that would be awesome.
Just point it this way. So.
I was just saying I'm going to move through my notes relatively quickly, and then we can have a chat, depending on what you all have as far as interests. So the way I see it, there's two big things that I believe are going to affect mortgage financing and real estate financing in general. Maybe three big things in the future. One is the way our government does manage business cycles. I believe that there is a collection of reasons to believe that business cycles are going to get worse before they get better. This is this whole context is presupposing that neither Lars nor I become president of the United States. If we do, all bets are off. We might be able to change business cycles a little bit. But as I see it, the business cycle is likely to be exacerbated by government policy going forward. It's for a couple different reasons. One is, not only has the Fed not improved its ability to control the business cycle, but I believe has thrown in the towel to a certain extent. When we move away from just targeting a particular interest rate, the Fed funds rate, and move to this quantitative easing framework, how many years ago now? A dozen years ago, right? To a large extent, the Fed threw in the towel and admitted that it cannot control things as well as it thought it could. And started pumping in not just some money, but tremendous amounts of money, even by the Fed's own historic standards, without knowing what the ramifications would be. Even if you didn't pay any attention to the Fed ever, even if you didn't spend years in grad school worrying about how the Fed conducts its business, the fact that they have, in effect, made this tacit admission that they can't control things, they have the ability.
It's a hole in there. It's
Yeah, have a seat. I'm just making the case that the business cycle is going to get worse, not better. Should worry us. The fact that we have a lot of inflation right now, without knowing what its ramifications are going to be, should worry us. And I don't mean we're going to have a recession next year, which we probably will. What I mean is, in the long run, the Fed has proven that it cannot control the business cycle. Number two, from a fiscal policy perspective, the federal government of the United States has proven that it feels quite comfortable, whether it's Republican in power or Democrat in power, feels quite comfortable spending not just billions, but trillions of dollars when the shit hits the fan. And has proven that fans being hit by shit is a much broader array of events than we had thought before. Right? Because now we're talking about disasters that are not just man-made, but government-made. In other words, the government has proven it's quite comfortable shutting down big parts of the economy and then pumping in money as though that's going to offset the effects. Right? That whole framework, that whole genre, suggests that we're in for some very weird things in the future that we haven't faced in the past. And as far as business cycles go, that can't be anything but bad, particularly when you look at the natural disasters that we're likely to form here, isn't it? I'm dying. You look comfortable, but I'm dying. The natural disasters that are only semi-man-made going forward. I don't mean natural like, acts of God, but the things that are external to what the government of the United States feels like it can control. And the big ones that come to mind are climate change. However anyone feels about the science, set that aside for a moment. There are a lot of people in the United States who anticipate our economy having to make big changes. That necessarily means there's going to be large government reaction and large government expenditure, none of which is likely to be paid for other than the issuance of debt and monetization. Because these expenditures are not going to be for productive purposes, at best, they're going to be to retrofit cities to deal with climate change, right? That's the best possible interpretation of the trillions of dollars our government is likely to spend over the next couple of decades. At worst, it could be a waste of money. But at best, it's just to deal with stuff that's happening, right? That necessarily is going to exacerbate any way you might feel about business cycles. The other one is war. Our government has also demonstrated a great deal of comfort waging war for, I don't want this to sound horrible, so give me a little slack here, for relatively minor reasons, right? Not us being attacked, right? Trillions of dollars spent in Iraq and Afghanistan. However you feel about it, let's set that aside in the same bucket as we put climate change science. But we're not going to talk about science. We're not going to talk about foreign policy. However you feel about, we all have strong opinions about foreign policy, and we have strong opinions about the science. Set those aside. Those reasons for the wars that we have fought are not so large that you should not expect them to come back again in the future. Relatively minor things are likely to set us off again in the future. You can't look at Iraq and Afghanistan and say that was the war to end all war. See where I'm going? There will be other stuff to deal with. These expenditures are likely to exacerbate the business cycle. And this is something I want everyone to think about, even though we don't have an answer. The United States government cannot continue on the same path that it's on without facing its own fiscal crisis in the next generation. Does that make sense? No economists that look at it think that it can make it to the end of the century. The debate is, will it run into crisis in the next 20 years or the next 75 years? These are things that we all have to worry about as far as financing goes, because the future for financing is going to be one of dramatic risk. This is going to make it much more difficult to find fixed-rate financing, for example. Not today, not tomorrow, but as Humphrey Bogart said, soon and for the rest of your life. The risks are going to be dramatic and profound. So, let's talk about the other thing that I think is important to the future of real estate finance, and that's the new technologies coming. Specifically, AI and blockchain. For my money, the most important things about them for the lives of people like us, right? I'm going to go on a limb. I could be wrong about this, so if I am, I'm going to say that my chat is not meant for AI scientists and blockchain scientists, right? I'm not an expert per se in blockchain and AI. I've used them, right? But that doesn't mean I understand what's going behind the black box. Having said that, what matters for people like us is that we're going to have to get good at using them. If you're in real estate, even if you're a customer, you're going to have to get used to using these technologies, again, not today, not next week, but soon and for the rest of your lives. Sooner than 10 years from now. How are you?
Hi.
How are you? Thanks for being here. AI is going to fundamentally change customer relationships. It's going to make things better, but scarier. Scarier, because it has the potential for making a lot of things worse. Would you agree? I noticed I got a chuckle when I said better, right? Well, yeah, but scarier. And there's a couple of different threats. One is the government being involved. We have to talk about that, particularly in the context of blockchain. But also AI getting outside of the control of whoever is deploying it, right? However, every piece of the real estate financing process is going to be taken over by AI to one degree or another. Your documentation, your application processing, aligning you with the correct product for you personally, evaluating your application, not just filing your application, but evaluating your application. The ex post risk analysis that your financial institution is going to conduct, not only on you, but millions of people together to evaluate what kind of risks you are and other people are. Processing your transactions going forward will be handled by AI. And of course, resolving any conflicts or anything that goes wrong is likely to be handled by AI, including the customer interface itself. Think about that. So it's not obvious that it will be better, but this does present an opportunity for someone who positions himself or herself as the trusted central person to whom your customer goes. It presents an opportunity for you to manage everything, because everything that we just talked about is going to be handled by something as simple as a plugin. Think about that. Every aspect of AI is going to be handled just by a plugin, which means that the potential for disintermediation in these relationships is huge. Think now about all the money. Is anyone here a title attorney? I hope not. I hate those guys. Does anyone here not hate title attorneys? If you don't hate title attorneys, we need to speak afterwards. We'll talk. Okay. The payout ratio for title insurance is so much lower than the payout ratio in other types of insurance as to suggest that it's a completely different type of industry.
But it's fraud.
I hate the F word, but you do you. It's damn near fraudulent.
Yeah. It's a bogus risk, bogus danger. Yeah.
It's a bogus risk and a bogus danger in the sense that you can't even get it. You can't even get the product until after they do the analysis. Right? So you pay them for the analysis, and then they determine they have no risk. Now they are willing to charge you for the service, right?
Right.
Of just confirming the analysis you've already paid for.
So you think people shouldn't buy title insurance then?
I know that people shouldn't buy title insurance. That of which I'm certain. What I'm saying is that in the future, you will be able to disintermediate the person shaking you down for that enormous fee, and at least be able to shop for it, because it will be handled by AI. Let's switch now and talk about blockchain.